Can you quantify that in regard to overall sales price and what that looks like? So if they were able to qualify for $1 million, the rates just raised a quarter of a point. Now what can they afford?
Oh, it's a very minuscule difference. So if we're talking about a quarter in rate, we're at $1 million before, then we're going to be around 960 now.
Okay.
So it's very, very minimal for sure.
So there's no need to panic. There's no need to decide not to buy.
No, not at all. Not at all.
What's on everyone's mind? Interest rates. We're going to talk about where they are, what it means for you, what you can anticipate, and really dissect what that means in today's market. And we are so excited to have Keith Spain from BankSouth back because he delivers all the knowledge and all of the realness. Yeah, that's right.
All the knowledge. Oh, I don't know about that.
Drops it. We also have our newest team member, Legionnaire Clarity, here, and we're so excited for her to join the call as well.
Yes, I'm excited as well.
Okay, and as always, Lauren Skudowitz is going to hit them with the first question.
Hey, everyone wants to know, what are the current rates being offered? And maybe we should start with a 30-year conventional.
30-year conventional. So right now we are at about 6% on that product. Of course, that's up a little bit from last week. But we are hopeful that we have already priced in the Fed's rate increase that we anticipate today. So we are hoping that we will stay in the low sixes for a while.
Great. Yeah. Now, how does the jumbo product compare?
Well, so good news on that front. So the jumbo is currently about 3/4 of a point lower. So we're in the low fives on that. So I'll tell you, if you have clients that are kind of at that cutoff where they could borrow 647,000 or 650, we definitely want to push them into that jumbo arena so we can get them that lower rate for sure.
And is there a minimum down payment they have to make in order to qualify for a jumbo loan?
Well, the minimum down payment is 10%.
Okay.
However, in order to qualify for these great jumbo rates, you do need a minimum of 15% down to really get into where the rates are worth it for sure.
Good
awesome.
Call.
Yeah. And there's one other, I guess, item to note as far as the products and current rates go, is our 5-year ARM is currently about 1 percentage point lower on the conventional side. So you really can get back down close to 5% if you're willing to do a 5-year ARM, which, we are very hopeful that mortgage rates in the next 5 years will dip way back lower than 5% for sure. So, no one can guarantee that, but we feel good about the prospects of getting to refinance into a lower rate in the next 5 years.
So please unpack that and tell people, what does that actually mean? So ARM meaning adjustable rate mortgage. If somebody enters into that and they want to take advantage of this 5%, tell them what that entails.
Well, and kind of what you just said. So it really stands for adjustable rate mortgages. And you get your interest rate guaranteed for 5 years. And at the end of that period, it will become adjustable based on an index. And, there are several different indexes that are being used currently, the T-bill, and there's a couple of others as well. So it'll kind of depend on the index your ARM is based on as to what will base your rate increase or decrease on at the end of 5 years.
I think this is such an incredible opportunity for people because a full percentage less, that's huge. Mm-hmm. And also, if you really think of the cadence of people moving, people are moving so much more frequently than ever before. And I have clients reach out to me all the time. Hey, Meg, we're going to buy this house. We'll likely be there 3 to 4 years. Mm-hmm. And I will absolutely then say, well, guess what? I have an incredible opportunity for you to get a point less using an ARM. And it used to be such a stigmatizing adjustable rate mortgage. Woo, it's just scary. But when you really understand what it is, It's actually a great opportunity.
Well, I agree. And, here's the thing, adjustable rate mortgages got a bad rap after the 2009 debacle. But keep in mind, at that point, many of these adjustables were interest only. They were 80, 20, 100% financing. So today's ARM is a whole lot different than it was in 2008 for sure. So there's not quite as much risk as you had way back then.
Yeah, amazing. We had asked you before about your lock and shop. And for our viewership, if you had talked to us, if you had seen our video, we loved your lock and shop, which means that you can lock your rate in for X amount of days and continue to look for that property while still feeling that assurance of a set price for the mortgage and the rate. Keith, do we have that option still?
We do. But a couple of changes to the policy. It is available for conventional FHA and VA loans. And we can lock in for up to a 35-day window.
Okay.
So
Great.
it's wonderful for people that are ready to buy right now.
Yep.
The only thing to keep in mind is it isn't available on a jumbo product. It does have to be, conventional FHA, VA. One other item to note, it also includes a float down. So if rates do decrease after we have locked in, you have a one-time shot at floating it down to the lower rate. We are not terribly optimistic that we'll get to use that in the next 35 days, but it is available as an option.
And there's no cost to lock it or float it down.
No, there's no cost at all to that. The only thing we have to have is an application loaded into our system and just a few of your documents, pay stubs or tax returns. That's all we need to go ahead and get something locked in.
And I think this is great for buyers who don't have a property address, right? Most people think they have to be under contract in order to lock in a rate. So this can get a jump start ahead for 35 days. And if you work with one of the three of us, we will find you something in 35 days.
Oh, I love that. That's excellent.
No problem. That is
No problem, right.
Lifetime. I'm used to like 24 hours, so that's just
Wow.
that's leisurely. Lauren, take away the last question we have, the juiciest.
Okay. So this is the one that I think everyone will need to pay very close attention to. So Keith, can you quantify, and let's just choose, for example, at $1 million price point, if mortgage rates go up by 0.25%, what exactly does that equate to in additional monthly payments for the buyer?
All right, so good question. So let's say we are at the $1 million mark for the loan. Then for every quarter that the rate goes up or down, it's going to be about $150 a month in total payment. So, and
It's not that bad.
No. If you looked at it as the percentage of the total payment, I mean, we're talking minuscule, like in the single digits difference, like 5% difference in the total payment for sure.
Can you quantify that in regard to overall sales price and what that looks like? So if they were able to qualify for $1 million, the rates just raised 0.25 point. Now what can they afford?
Oh, it's a very minuscule difference. So if we're talking about a quarter in rate, we're at $1 million before, then we're going to be around 960 now.
Okay.
So it's very, very minimal for sure.
So there's no need to panic. There's no need to decide not to buy.
No, not at all. Not at all.
Yeah.
And I do believe that there are a lot of opportunities available for buyers in the short term, simply because some people are going to wade out of the market because they are a little worried about rates. So I think that is going to create some opportunity for buyers, at least in the short. At least while rates are a little bit on the high side, I think that may help the buyers get a good deal and maybe even get a deal at all because there are fewer buyers out there.
Yeah, it's helping to offset those increases over asking price.
Yes,
So
exactly.
it's really, goodness, all these headlines that I see come through are just so salacious.
Yeah.
However,
Yeah.
the market is still healthy. People are still buying and selling. And now for all of my fatigued buyers, we're ready because now it's not this arduous war going on.
Mhm.
We're able to come back for a second time. We're also able to evaluate the property thoroughly.
Yeah. Yep, yep, yep. We are hopeful that there is some opportunity here for sure.
Yes. Well, Keith, you're just the greatest. And I have to
Oh,
say out loud, your eyebrows look fabulous today.
oh, wow.
Have you
Okay.